William J. O'Neill, How to Make Money in Stocks, a Winning System in Good Times or Bad. Are you looking to navigate the exhilarating yet complex world of stock market investment? The book, How to Make Money in Stocks, a Winning System in Good Times or Bad, by William J. O'Neill is here to help. By distilling lessons from the behavior of past stocks, the book offers valuable insights into reading stock chart patterns, understanding the importance of earnings growth, and identifying leading industry players. Master O'Neill's strategies to find patterns in the market and learn when to invest in innovative companies based on solid foundations. Whether you are a novice or a seasoned investor, this book summary will provide you with the essential knowledge to make profits in the stock market and achieve financial success.
Mastering Stock Charts, What You Need to Know. Learn how to make informed investment decisions by studying past stock movements and identifying patterns in price charts. The well-founded cup with handle pattern is a significant one to recognize, as it signals a strong base and a promising future. History has shown that understanding stock charts can lead to great rewards, and it's a crucial step towards becoming a successful investor. The importance of earnings in stock investing. The key message is that an increase in earnings is the most important quality in a good stock. This is backed by history, such as Google and Apple's ascent following a spike in their earnings. However, investors must avoid getting swayed by rumors of big future earnings, as evidenced by the dot-com crash. Investors should focus on a company's earnings per share (EPS) number and search for firms with consistent EPS growth. While earnings growth alone should not be the sole basis for buying a stock, it remains the most critical factor to consider. Innovative companies and the stock market. Innovative companies have a significant impact on the stock market, with disruptive technologies driving the success of companies like Northern Pacific, General Motors, and Cisco Systems. While innovative companies offer great opportunities for investment returns, investors need to be cautious in timing their investment decisions. Successful investors should seek out pioneering companies and identify the right time to buy in. Supply and demand in stock picking. The principle of supply and demand, which determines the price of goods, also applies to the stock market. A small company can yield more explosive results, while a big company might be a more reliable investment. The ownership of shares by top management plays a key role, as a significant percentage of shares owned is a good sign of their vested interest in the company's success. Additionally, companies buying back their own stock is a good sign, suggesting that a high demand for their stock may be on the horizon. By the leader. Invest in leading companies with unique and innovative products driving strong earnings growth, sales, profit margins, and return on equity. Avoid sentimental favorites and copycat companies. During a bull market, dynamic companies outperform old favorites. Second-best companies rarely benefit from the industry leader's success. Be the first to invest in the real innovators and entrepreneurs driving the market. The importance of institutional sponsorship. Investing in stocks with institutional sponsorship can lead to higher returns. However, it's crucial to consider the fund's stock-picking philosophy and remain mindful of overowned stocks. Investors who want to invest in stocks without purchasing individual shares often choose to invest in funds, which combine various stocks into a single investment. In the United States, these funds are referred to as mutual funds and are provided by large institutions. Financial experts who run the funds hand-pick the stocks to include. Individual investors may benefit from checking which stocks institutional experts have chosen. Big institutions make up the majority of stock buying in the world, influencing the market and impacting stock prices. Therefore, investors should pay attention to the activity of these institutions and own shares that the big institutions are purchasing. To increase the chances of higher returns, investors should be aware of the best-performing funds and their top holdings. The best-performing funds are those that generate significant annual returns and are run by insightful investors. Websites such as Investors Business Daily and Morningstar.com provide information about these funds and their top holdings. Investing in stocks with institutional sponsorship can be beneficial, but it's crucial to consider the fund's stock-picking philosophy. Investors may learn from the best by examining the prospectus, which details the fund's techniques and types of stocks purchased. However, investors must also conduct their own due diligence before investing in a stock. It's worth noting that some stocks become over-owned by big institutions, meaning that they are purchased automatically regardless of their health. For instance, Xerox, which was once a favorite of institutions in the 1970s, eventually went down when analysts realized that something was wrong. Therefore, it's necessary to learn from the best but also conduct independent research. Keeping an eye on the general market. The stock market can be unpredictable, and individual stocks can lose value quickly in a downturn. To avoid losing money, it's important to pay attention to the general market direction. This means monitoring big stock indices like the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite. By checking for significant buying or selling, you can judge the general mood of the market. Experts can be expensive distractions, so it's best to observe the market itself. Remember to keep a close eye on these indices, as a change can happen over just a few weeks and failing to pay attention could lead to significant losses.
In conclusion, How to Make Money in Stocks offers excellent guidance on analyzing the stock market and making strategic investment decisions. Understanding stock chart patterns, focusing on stocks with increased earnings, investing in innovative industry leaders, and monitoring the general market direction are essential for maximizing your returns. Additionally, learn from institutional investors, but remember to conduct your own due diligence. Ultimately, staying well-informed and attentive to market trends is key to making wise investment choices. Cherish this holistic understanding and apply these strategies to achieve financial success in the ever-changing world of stock market investments.